Have you ever wondered how you can buy and sell digital money with cash or cards? Do you know what Bitcoin ATMs are and why they are popping up everywhere in the US? Have you ever used a Bitcoin ATM before? If yes, what was your experience? If not, why not? The rise in the number of Bitcoin ATMs worldwide can be attributed to several factors, with the increasing demand for cryptocurrencies among the general public being a significant one. Cryptocurrencies, once a niche interest, have now entered the mainstream consciousness, and their acceptance is growing rapidly. Bitcoin ATMs, or BTMs, are machines that allow people to buy and sell Bitcoin and other cryptocurrencies using cash, credit, or debit cards. They are similar to traditional ATMs, but instead of dispensing or depositing cash, they transfer digital coins to or from a user's wallet. Bitcoin ATMs are becoming more popular and widespread in the US, especially in malls and gas stations, for several reasons. One reason is the convenience and speed of Bitcoin ATMs. Bitcoin ATMs offer a fast and easy way to buy and sell cryptocurrencies with cash, which is still the most widely used payment method in the US. Users do not need to have a bank account or go through a lengthy verification process to use a Bitcoin ATM. They only need to scan a QR code, insert cash, and receive or send cryptocurrency to their wallet. The whole transaction can take less than a minute compared to hours or days for online exchanges. Another reason is the accessibility and availability of Bitcoin ATMs. The number of Bitcoin ATMs installed worldwide has grown from 4,000 in 2019 to almost 40,000 in 2023, with a growth rate of 25% over a 12-month period. The US accounts for more than 80% of the global market share, with over 32,000 machines installed across the country. Bitcoin ATMs are not only expanding in number but also variety. There are different types of Bitcoin ATMs, such as one-way, two-way, kiosk, and teller, that offer different features and services. Some Bitcoin ATMs allow users to buy and sell multiple cryptocurrencies, such as Bitcoin Cash, Ether, Litecoin, and Dash. Some Bitcoin ATMs also provide additional functions, such as bill payment, remittance, and donation. However, the convenience, speed, accessibility, and availability of Bitcoin ATMs also make them a target and a tool for scammers and criminals. Bitcoin ATMs are often used to facilitate fraud, extortion, money laundering, and other illicit activities. Scammers and criminals can exploit the anonymity, irreversibility, and volatility of cryptocurrency transactions to deceive and harm their victims. Imposter scams. Scammers pretend to be someone else, such as a government official, a tech support agent, a family member, or a romantic partner, and convince their victims to send them money through a Bitcoin ATM. For example, a scammer may call a victim and claim that they owe taxes, have a virus on their computer, need help in an emergency, or want to meet in person and ask them to pay with Bitcoin. The scammer may also direct the victim to withdraw money from their bank account or investment account and deposit it into a Bitcoin ATM. Once the victim sends the money, the scammer disappears, and the victim cannot recover their money. QR code scams. Scammers use fake or tampered QR codes to redirect the victim's cryptocurrency to their own wallet. For example, a scammer may place a sticker with their own QR code over the original QR code on a Bitcoin ATM, or send a fake QR code to the victim via email or text message. The victim may not notice the difference and scan the wrong QR code, resulting in the loss of their cryptocurrency. Money laundering. Criminals use Bitcoin ATMs to launder money from illegal sources, such as drug trafficking, human trafficking, or tax evasion. They can use cash or prepaid cards to buy cryptocurrency from a Bitcoin ATM and then transfer it to another wallet or exchange it for another currency. This way, they can hide the origin and destination of their money and avoid detection and regulation by the authorities. According to a survey conducted by Deloitte, a staggering 75% of retailers plan to accept either stable coins or cryptocurrencies as payment methods within the next 2 years. This statistic indicates a shift in the retail industry's attitude towards digital currencies, recognizing them as a legitimate and potentially advantageous form of payment. Furthermore, the survey revealed that 83% of retailers expect consumer interest in cryptocurrency to increase over the next year. This expectation aligns with the observed trend of growing curiosity and enthusiasm for cryptocurrencies among consumers. As more people become aware of and interested in cryptocurrencies, they naturally seek convenient and accessible ways to acquire them. This is where Bitcoin ATMs come into play. These machines offer a fast and easy way to buy and sell cryptocurrencies with cash. Despite the digital revolution, cash remains the most widely used payment method in many countries, including the US, therefore. The ability to transact in cash at Bitcoin ATMs makes them an attractive option for many individuals, especially those who prefer or rely on cash transactions. The US leads the charge in this expansion, accounting for more than 80% of the global market share, with over 32,000 machines installed across the country. This dominance can be attributed to the country's advanced financial infrastructure, high level of tech adoption, and favorable regulatory environment for cryptocurrencies. But the growth of Bitcoin ATMs is not just about quantity, it's also about diversity. There are different types of Bitcoin ATMs available, each offering unique features and services. These include one-way machines that only allow users to buy Bitcoin, two-way machines that enable both buying and selling, and kiosks, and tellers that offer a more comprehensive range of services. Some Bitcoin ATMs have expanded their offerings beyond Bitcoin to include other popular cryptocurrencies, such as Bitcoin Cash, Ether, Litecoin, and Dash. This diversification caters to the growing interest in altcoins and provides users with more options for their crypto transactions. Moreover, Bitcoin ATMs are evolving to offer additional functions beyond simple crypto transactions. Some machines now provide services like bill payment, remittance, and donation, transforming them from mere crypto dispensers to multifunctional financial service points. No one controls cryptocurrency. It does not mean that it is free from rules and laws. In fact, Bitcoin ATMs have to follow many rules and laws made by the US government and the states where they operate. These rules and laws are meant to prevent people from using Bitcoin ATMs for illegal or harmful purposes, such as money laundering, tax evasion, or terrorism financing. The Bank Secrecy Act, BSA. This is a federal law that was passed in 1970 to prevent money laundering and other financial crimes. The BSA requires financial institutions, such as banks, credit unions, and money transmitters, to register with FinCEN, which is a government agency that collects and analyzes information about financial transactions. FinCEN uses this information to detect and prevent crimes such as tax evasion, fraud, terrorism financing, and drug trafficking. Money transmitters under the BSA, and they have to register with FinCEN as well. They also have to report any transactions that are over $10,000 or that are suspicious or unusual to FinCEN. For example, if a customer buys or sells a large amount of cryptocurrency in a short period, or if a customer uses multiple Bitcoin ATMs in different locations, the operator has to report these transactions to FinCEN. The BSA also requires Bitcoin ATM operators to keep records of their transactions for at least 5 years and to make them available to FinCEN or other authorities upon request. The Anti-Money Laundering Act, AMLA. This is a federal law that was passed in 2021 to strengthen the BSA and to combat money laundering and other financial crimes. The AMLA requires financial institutions, including Bitcoin ATM operators, to have a program that checks the identity and background of their customers and keeps records of their transactions. This is called KYC, which stands for Know Your Customer. KYC helps to prevent people from using fake or stolen identities to buy or sell cryptocurrency, or to hide the source or destination of their money. The AMLA also requires Bitcoin ATM operators to have a program that monitors their transactions and detects any suspicious or unusual patterns or behaviors. This is called AML, which stands for Anti-Money Laundering. AML helps to prevent people from using Bitcoin ATMs to launder money from illegal sources, such as drug trafficking, human trafficking, or tax evasion. The AMLA also gives FinCEN and other authorities more power and resources to enforce the BSA and the AMLA, and to impose penalties and fines on Bitcoin ATM operators who violate the rules. The Money Transmitter Act, MTA. This is a state law that varies from state to state, but generally regulates the business of transferring money from one person or place to another. The MTA requires money transmitters, including Bitcoin ATM operators, to get a license from the state where they operate and to follow the rules and regulations of that state. Each state has different rules and regulations for money transmitters, such as the amount of capital, insurance, and bonds they need to have, the fees and taxes they need to pay, the reports and audits they need to submit, and the consumer protection and privacy measures they need to provide. The MTA also gives the state authorities the power and responsibility to oversee and regulate the money transmitters and to take action against them if they violate the rules or harm the customers. What do you think about Bitcoin ATMs? Do you use them or plan to use them in the future? Let us know in the comments below. If you enjoyed this video, please like, share, and subscribe to our channel for more informative and interesting content.